checking out The Well. This is Riocan's largest and most expensive project right now, and more impressively than not is what's going to happen to this train track back here, because apparently it's going to get turned into an actual park. And if that happens, how much value do you think it's going to add to this piece of real estate? And I mean, just look at this location, right? So we have the Rogers Center literally back here with the CN Tower. On this side, guys, we're kind of a little bit out of the entertainment district. So what should be most impressive is that they're going to try and build an entire landscape over the entire train tracks here. Now, this is a multi-billion-dollar project, and just tell me how much value it's going to add to this insane piece of real estate here, guys. So I'm going to keep an eye on this one because the construction's supposed to be finishing up, I think, sometime this year, toward the end of this year. But at least it's mostly rented at this point. But maybe what we should do is go take a look at some of their other properties. But my God, what a beautiful piece of real estate. Look at the size of this pit they're working on. So this is probably the earliest construction one that I found so far that Riocan is doing. It's a shame because I can't get a good angle of it anywhere, but I don't think it matters because it's not like the building's done or even close to being started yet. There's some other construction going on back here as well. Looks like there's a new building going up here, but this one block is in a really nice area. It's not as close as the Well right downtown, and that Well property, oh my God, you want to talk about premium real estate, man. But for now, this is going to be some pretty impressive stuff that Riocan needs to be paying me for, because I only own the stock, but I've never actually come downtown to try and find their properties. So I figure, well, the lockdown's going on, there's nobody out here, would probably be the best time to do it. And I don't know if that's a good idea on my part or not, but heck, I don't see anybody. But take a look at this construction, guys. I mean, the properties here, oh my God, I can't imagine what these things are going to cost, considering they've owned these properties for a little while now. Look at these buildings over here. Look at the gold architecture there in the windows. What an interesting area, man.
So let's just take a moment. I want to deep dive down into these properties, give you guys a better view. Then we're going to look at the stock, analyze it. I'm going to share with you some concerns and opinions I have surrounding the near term of Riocan. But kicking this off, guys, let's start with the first one that we just looked at there, the 11 Yorkville, Toronto, Ontario. The images they show make it look super classy. The nice fireplace right next to the pool. They're really good at being suave, I might say here, folks. Taking a look, this is going to be a 62-story building with 586 units, and it's going to contain 35,000 square feet of retail space here, folks. And I told you Riocan's vision of the future for like downtown Toronto is these mixed-use condo buildings where they can be partial like residential, partial like malls, and then some of them are even going to include basically just office space for things like Shopify, right, which we're going to see here. So taking a look at the next building, the most premier of the bunch, it honestly wouldn't surprise me if this ends up being worth like $1 billion piece of real estate. Like this one that we looked at downtown there, guys, I mean, look at what it's going to look like. Hopefully when it's finished here, it's going to be a marvel and a half. And I mean, just take a look. I mean, it's going to be 6 buildings. So first of all, I can't even count them. There's 1, 2, 3, 4, 5. Where, I mean, maybe the 6th one's hidden in the back somewhere there. I don't know. But still, it's going to be 6 buildings, 1,700 units, residential units here, folks. It's going to have 420,000 square feet of retail and 1.1 million square feet of office. So, I mean, you're going to be able to work, live, and shop all within your own building here, folks. And this was the one that we just looked at to give you an idea on the map. It was exactly where it's located. It's in one of the most premier spots in Toronto, not even a minute walk from like Union Station, the main train station, and then you got, you know, the CN Tower, the Rogers, everything that we looked at there, right? And then one that I didn't share with you that I went and looked at, it wasn't that impressive in my opinion because it's still like early construction, is the Strata here. And this is just an 8-story building, but it's in a nice area. It's going to consist of 8 stories, 61 units, 6,000 square feet. I didn't think it was relatively as impactful to like share this, but it was really neat because if you take a look at the map, guys, we started downtown, we took a look at that property, we drove up there to the Strata, strata, and then we drove over to this building, or the first building we looked at here. So we did this little loop in Toronto just to take a look at all these properties, and just taking a look at Riocan living. A lot of you were joking that I should live and bleed Riocan, and I should just go rent from one of these buildings and just try it out maybe for a year. It's nice that Riocan is doing this pivotal shift into basically residential, which is some of the risk I want to talk about in the near term with this company, guys. So taking a look at the stock price, I still think we're heading into an exact replication of what we saw in 2008. I mean, Riocan dropped to those levels in this pandemic, which made no sense to me at all, because again, we'll take a look at their income and tenant basis here. But however, it's just basically halfway through this recovery mode. Literally, the stock had a $32 price target on it before this happened, so I still think we're trading at a good value. It's just the fact that they cut the dividend, so it's not as attractive here at a 4.68% yield. However, this is probably one of the few REITs where I do believe that there's going to be a lot of growth potential moving forward. So I mean, at least you're going to be looking at 3 to 5 years of development. The fact that, let's just take a look at the tenant basis here. The fact that they've already got a fairly robust tenant basis, but my concern here is I think the lower weighting of their tenant basis is about to get crushed. And let me explain. So we got retail here making up 90.6% of their current tenants, which is a problem because retail is what's getting hit the hardest. Office, 7.8%, and residential, only 1.6% right now. They're claiming that 79% is providing a strong and stable income, okay? So let's just take a look here, guys, and see what these tenants actually are made up of, because so far my favorite tenants are the grocers, pharmacies, and liquor stores, because these are just, they're not going anywhere, right? Like they're going to be fine through this whole thing. Then you got value retails, essential services, specialty retailers, other personal services, furniture, furniture might be doing okay maybe, but a lot of these tenants kind of itch me the wrong way. I mean, movie theaters are going to get crushed, except for the big ones that might come back. But like I said, guys, it's just, take a look at this. Let me scroll down. So they're trying to increase the exposure to things like Loblaws, Costco, LCBO, Canadian Tires. Hopefully they can continue to increase that exposure, because you really need more better tenants than those ones, guys. But at least they're reducing the tenants like Moore's. I've driven through some of these malls that they currently operate, like these outlet malls. And honestly, I'm not the biggest fan of a lot of these companies, guys. So hopefully we'll see a continued reduction here. But the problem is even if these tenants are trying to get through this, they're taking those government benefits to pay their rental problems, which we saw in their last earnings. I'm just worried that they're not going to make it through this next shutdown, because unfortunately we're in this mixed area where people are trying to get vaccinated, but we're not quite on the other side of this yet. So we're already in our third, fourth, or God knows fifth lockdown at this point in Ontario. So I feel like this is going to be the last straw for a lot of these tenants. And luckily Riocan was at the bottom basement of, I think it was May of 2020. They collected about 72% of rents. So I feel like if their baseline is that low, I mean, we could see maybe at max a 28% hindrance on income, but I think that would be a stretch to the extreme. Likely they're going to continue collecting about 80 to 90% of the rents, I would guess. If they do anything over 90, like where they're at right now, because I think they're at about a 92% collection rate, the stock will easily fully recover past this point. I'm just skeptical. I think the malls will do fine once we're fully open and vaccinated, guys, but this is why the Riocan management decided to cut the dividend, and they decided to kind of just take a nice big breath, stack some cash up, going up at least until the other side of September here, when the government's claiming that's when everyone will be able to get vaccinated if they haven't already here, folks. So the only thing that I'm primarily looking forward to is the fact that before any of this happened, they went really far out of their way to do this pivotal shift into residential. We all know residential, safest place to be. They have this really awesome vision, and they've invested the dollars at a very good price point, in my opinion, because everybody knows real estate's going through the roof right now. So the fact that they got into these developments as early as they did gives them some, I guess, underlying, base asset value that I don't think has been baked into the stock just yet either. So this is what I'm primarily looking forward to. And I pass the question off to you at this point, guys. Do you bleed Riocan like I do? I mean, I'm fully engulfed into this company because it's such an easy REIT to understand. It's Canada's largest pure play REIT compared to a lot of the other ones I've talked about, like SRU. A lot of people, Smart Centers, keep asking me about. I'm still trying to dabble down and fully understand their value proposition, because a lot of these REITs operate under different, fundamentals, rules. There's other companies involved. It gets really messy, especially the bigger the REIT is and the more diverse and spread out it is. It's a little bit harder to grasp, whereas this, kind of like Facebook, in my opinion, unlike Amazon. Amazon's a really complicated trillion-dollar company. Facebook operates a few platforms, very easy to understand. I love companies. They're very easy to understand. So in light of all this, stay cool, stay awesome, and I look forward to catching you tomorrow.